market making some progress yesterday. And if we look at the sector providing bulk of the support, it was the building materials sector. Here in South Africa, we've had analysts suggest that the construction sector has legs to run. And if we do a broad overview of the overall buildings materials and construction space in Nigeria, are we looking at the same kind of story?
Yes, it's a similar story. I mean, a lot of investors are looking at the building material sector because of the large infrastructure deficit we have in Nigeria and the belief that there is going to be substantial investments in the infrastructure space. And so companies that are providing things like cement, iron rods, the basic materials needed for construction are seeing the toast of investors at the moment.
Well, it is the cement players for now that really standing out in the spotlight. I mean, in yesterday's session, we had Benue Cement Company, CCNN and Ashaka all bagging maximum points. I mean, what would be a stock pick in your books out of these players?
In terms of direct investment in cement, one of the biggest cement guys is Greengate Cement, but unfortunately they're not listed. But Ashaka Cement, Benue Cement is a part of the Greengate group, and has gone up in recent days because it's had a problem with a tax issue with the Benue state government, which was sorted out last week. And on the back of that, I think investors have thrown themselves into the stock. I think Benue Cement, Ashaka Cement has done pretty well in the past, and Lafarge Wapco, although their results were a bit disappointing, I mean, they explained it through energy shortfalls, and the investment they put in alternative energy sources should see them do quite well this year. So those will be the stock picks.
Well, let's take a look at Wapco, because it does seem to be the laggard in the sector. I mean, it's been for a while, barring the occasional spurts. And as you've just said, it's on the back of those recent results that were released. I mean, what's the investment story as it stands right now, particularly when it comes to Wapco?
Wapco has been in Nigeria for a number of years. They have main factories in Ogun State, and they rely mainly on gas supply for a lot of their for the power of the plants, because cement factories are energy intensive. What's happened is that there's been disruption to that gas supply for the last 2 years, and it's caused the company to have to close down for a number of days in 2008 as well as in 2009 as well. Now what they've done now is they've invested in expanding the plant and also invested in alternative energy sources, so they're not relying solely on the gas supply. And that investment will come into play in 2009. So I think there'll be less disruptions from an inadequate gas supply for their operations, which will help the bottom line. The turnover revenue has increased according to the last results from the previous year, but it was just the PAT was lower because of these disruptions.
Yeah. Well, with this being the scenario then for cement players, let's look at how this actually translates for players in the overall construction space, the likes of Costain and Julius Berger, for example. Are these companies now boasting the merits?
I think they will. I mean, Costain released the results about a week ago. Again, it was an increase in revenue, but their PAT was down. And that was really because of higher interest costs, and also they increased provisions for doubtful debts. So that increase affected their PAT, which some people would say was prudent at the moment. But likes of Costain West Africa and Julius Berger have announced recently quite big construction orders with the federal government. For example, Costain is working on the rehabilitation of part of the Lagos to Kano railway line, and one of the big contractors on that, which probably sees some of the income from that falling in this year. Julius Berger has always got a lot of federal government contracts. They're working on quite a number of things in Niger Delta as well, which are expected to help in the infrastructure development there. So those two companies have always done well out of federal government and state government contracts, and they continue to do so. Well,
here in South Africa, we saw Avenge out with numbers this morning showing that operating profit was up to down to 4.1%. It was down from 5.8%, which was recorded back in 2008, suggesting that margins are under pressure. When it comes to Nigeria, I mean, is quantity on the order book becoming more important than the actual quality of those order books?
I wouldn't say that. I would say that the order books for a lot of these construction companies are quite large, and they always have been. The problem has been delayed in payments, especially when they're working on federal government or state government projects. There's sometimes delays in payments, which can affect the cash flows of these companies, and that's what affects the bottom line a lot of times. For example, I use the Julius Berger was was owed a lot of money by the federal government. In 2007, the federal government released some bonds which to try and repay a lot of these contractors, called contractor bonds. And the likes of Julius Berger received huge payments through these bonds, which they were able to turn into cash by selling them to banks to try and cover these debt positions. So I think the main problem for a lot of construction companies in Nigeria is that their biggest client is the federal government or state governments, and the biggest problem is delaying payments for work done.